Welcome back. $200 million. This is how much David Sachs sold in crypto-related holdings before becoming the first ever crypto czar for the United States. We're going to be discussing that and also many other topics, including Cardano's complexity increases. Lawmakers are already fighting the strategic Bitcoin reserve. Peter Schiff is warning about a bubble popping, while Tim Draper is talking about $250,000 Bitcoin just being the start. We're going to talk about the Trump portfolio, Bitfarms, Coinbase, and much, much more. So let's get right into today's topics. And don't forget to give this video an absolutely free thumbs up and also hit that subscribe button. That way you never miss a new video right here on the channel. So we've been seeing, the markets really kind of coming down after the Trump pump, after the election. We saw basically the Trump pump and then the Trump dump. Well, there is a huge gap between sentiment and fundamentals, according to Block Tower Capital's founder. He sees a mismatch as a chance to make differentiated bets, expecting trending outperformance in the next run. Oh, wow. So let's get into this. So Ari Paul, who is the Block Tower Capital founder, says this is just one of the starkest divergences I've seen in sentiment and fundamentals. He said that while traders and analysts have turned bearish on crypto developers, and more broadly those working for crypto companies, remain much more bullish. He said all the data points I'm hearing from basically any crypto-related project or company that doesn't rely on natives near term is positive. Based on this, he's confident that crypto is a good buy over the 12-month time frame, but isn't sure if it's reached a short-term bottom just yet. Another analyst recently said the only way for Bitcoin to confirm that the bottom is actually in would be to close a week back above $89,000. Now, here's my view on the market, right? We don't know, like whenever you hear analysts or traders saying, oh, well, when we hit this divergence line, we're going to be going down, or when we hit this support level, we're going further down. It's like, yeah, obviously, right? Bitcoin is at $84,000. They'll say like, oh, if Bitcoin hits $80,000, we're probably going to hit 79,000. It's like, yeah, that's pretty obvious, right? We're not going straight to 80,000 and then bumping up to 100,000. Maybe we will, but likely not. And anyway, the main point is, the sentiment, right? How people feel about the market is really, really bad right now. And when you really look at the macro, the markets are much higher than they were a few years ago, right? But again, most people have been buying in or trading or just kind of expecting higher gains immediately and for the markets to go straight up, and they don't. They correct. It's like a roller coaster. The further down we go, the higher up we're going to go after that, right? The higher up we go, the further down we're going to go after that. It's the same thing like on a roller coaster, right? And so this is an important kind of concept to understand because, yes, the fundamentals are still there, right? Like nothing has changed with Bitcoin. Nothing has changed with Ethereum besides the FUD. I don't know if I pulled up anything about Ethereum. Well, I did. It was about Trump, so we'll just talk about it right now. Trump increases Ethereum holdings to over $500 million. Now, even though FUD is at all-time record highs, I believe, just in certain different cryptos and stuff like this, including Ethereum. I mean, I'm seeing like the most ridiculous posts from people and watching videos of people saying that Ethereum is never going to recover and Ethereum is never going to come back up. Most of the Ethereum videos on this channel do not perform well at all, which is very interesting because most people in crypto who are not maximalists of any coin hold pretty much the top cryptos, right? They at least hold some of it. So I'm surprised that more people are not bullish, right? I'm kind of bullish on all of this. But anyway, back to the sentiment. We don't know where things are going. I mean, even if we look at the fear and greed index, right, we're almost in the red fear zone for the fear and greed index. You can see on the top right of the screen. Listen, guys, we could still go further down. I do expect Bitcoin to dip a little bit further before we go much, much higher up. We still don't really have any clear guidance on money printing or what kind of is going on in that kind of realm. Until we do, and this may be until, mid-year, it really depends on kind of seeing what happens with the budget, what happens with the tax cuts that they're talking about implementing, because those things are going to be very bullish. And if the tariff kind of conversation calms down on a macroeconomic level, I think that we're going to see markets kind of reversing, because remember, it's not just crypto. The stock market is also in a little bit of rough shape. Anyway, moving along, a lawmaker is calling on the Treasury to abandon President Trump's Bitcoin reserve plans. So, this ranking member of the House Oversight and Governance Reform Committee urged the U.S. Treasury Department to abandon plans to establish a strategic Bitcoin reserve and digital asset stockpile. In a letter to the Treasury Secretary, this lawmaker condemned the effort as fiscally irresponsible and politically motivated. He warned that the initiative would serve no clear public benefit while significantly enriching Trump and his allies. Yeah, so here's the deal, guys. I don't know why they are fighting every single thing. Like, nothing Trump has tried to do so far. I've seen anybody kind of cheering on the other side or saying this is a good idea, which I think is unfortunate, right? Because at the end of the day, like when we're talking about Bitcoin specifically, it should not be political, right? This is about enriching the country, enriching the people in the country. That's what we should be worried about. We should not be worried about what's happening in other countries and continents, right? I mean, people in the US, they're living in, really horrible conditions. But they're like, no, no, no. Let's send more money to a war in another country that literally has nothing to do with the U.S. Right? I'm not saying that we shouldn't support other countries or whatever. Right? It literally has nothing to do with that, because people will say, oh, well, you don't want to support other countries. No, it has nothing to do with that. It's about enriching the country, enriching the people in the United States. This is what we pay tax dollars to do, to have the government actually create productive things for us: roads, bridges, nice, national parks, keep the water clean, keep the energy safe, keep the country safe, like all of these things. But you need money to do that, and you need to incentivize good work from the private and public sector as well. This is my opinion, by the way. And so when we're talking about Bitcoin specifically as well, this can help people. A lot of, like, the quote minority group is, the Latin community. And so people who are legal residents or citizens of the United States, sometimes they send money home and they're still, being charged exorbitant fees and very high transaction costs on both ends. And crypto can fix that. Crypto can make life way easier for people here and for people around the world. And why would they not be supporting this? Any lawmaker supporting this, especially when their demographic of their constituents is not all extremely rich people. I cannot figure this out. I mean, it may just be because the other side is very pro crypto and so they want to be anti crypto, but this is a losing battle, because look at this, guys. David Sachs sold $200 million in crypto related holdings before taking the White House job, ethics memo says. To me, well, let's read into it a little bit. It says David Sachs, the Trump administration AI and crypto czar, sold over 200 million worth of digital asset related investments personally and through his firm Craft Ventures before starting the job. Of the assets sold, documents say at least 85 million is directly attributable to Sachs, meaning him, not this company. Um, so yeah, which specific companies? I don't think it's showing which companies. I should have pulled up another. Okay, right here. Sachs sold roughly 200 million in crypto. He said, because I didn't want to even have the appearance of conflict. His people are asking him to explain which coins he owned, yada yada. Anyway, the bottom line is he sold 200 million worth of crypto and crypto related assets, so that there's no thought that there's going to be a conflict of interest. I mean, people still think that anyway. It's ridiculous. But to me, this says like he believed that this was so important to the future of this country, the future of investing, the future of technology, the future of money, that he gave all of that up, at least for the short period of time that he's going to be the AI and crypto czar. And although that there is some criticism about, the enthusiasm when they're making these incredible announcements about AI or crypto, like the strategic Bitcoin reserve and stuff like that, at the end of the day, I do think that this is needed, right? Because the previous administration was so anti-crypto. I mean, it was It was to the point where it's like companies and entrepreneurs and businesses were just like, we're just leaving the US because we do not have clarity. And the good businesses were being sued and having to pay ridiculous amounts of money in legal fees just to fight the SEC instead of utilizing that money to develop and grow the ecosystem of technology for our futures. Like, this is about the future, right? This is about the future. And this goes back into they're fighting it. Like, crypto should not be something that people fight. Like, I remember back during the bear market, people asked AOC, do you hold Bitcoin? And she said, no, I don't hold Bitcoin because I want to be able to, I don't want there to be a conflict. Same kind of thing like David Sachs. And she said that she wanted to be able to look at it objectively and not have it in her portfolio or something like that. And generally speaking, I'm like, if you're a lawmaker and you own a home, you're not going to not like be involved in property tax legislation or HOA legislation or you know minimum standards for home building and stuff like that. Like, you're not going to say, well, I'm going to sell my house because I don't want to have any conflicts. But with crypto and stocks, for some reason, like, people think it's just this huge big conflict of interest, which I guess it could be viewed that way. But the bottom line is, like, crypto is here to stay, right? There's like a huge amount of Americans that own crypto. Some are just holding for the long term and dollar cost averaging in and looking out for their future. Some are trading, and some, they got involved during a bull market and then they just didn't get it. They're not interested anymore. But the bottom line is, should people have the right to invest in this? Should the government be able to invest in this versus invest in companies and invest in things happening in other countries that have no benefit to the American people? I mean, this is the conversation that is going on in America right now. And the fact that this conversation is going on while crypto is kind of in the spotlight, I think is very, very important, because it's bringing up a lot of other issues as well and other concerns regarding crypto. And so this video was posted by Coin Bureau. It says, David Sachs rejects taxing every crypto transaction to fund a US Bitcoin reserve. So there is an idea out there. I'm going to play this video in a second. But there's this idea out there that, well, and we talked about this on the channel before, like potentially taking a part of the tariffs, or then, taxing a part of, taking a piece of capital gains tax and putting it into crypto for the strategic reserve. Effectively, that would be technically a tax on the American people. But let's listen to what David Sachs says. This is on the All In podcast. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up and also hit that subscribe button. That way you never miss a new video. We try to upload as much as possible to keep you on top of the latest happening in the financial world. Let's listen to David Sachs, and this is Jason having the conversation on the All In podcast. Let's listen in.
How about a simple crypto tax? Crypto wants to be legal. You're the crypto czar. Crypto wants to be regulated. They want the rules. They want the rails. Simple suggestion from your bestie. Why don't we charge every transaction in the United States 0.01%, just about 1 bit in that native currency? So you want to trade some Solana for Ethereum, for XRP, whatever, put in whatever names you want there. The government says, hey, you want to have a great, vibrant system here? We're going to need to take just the most modest of taxes, de minimis, in fact, in the native crypto and put it in the stockpile. This seems to me like a very
That's always
easy
how
win.
Taxes start, is that they're described as being very modest. When the income tax started, it only applied to like 1,000 Americans.
Yes.
And the legislators swore up and down that it would never be applied to middle class people. So I don't particularly like the idea of new taxes, even if it's promised that they just won't affect people very much. That sounds burdensome to me.
So very interesting stuff. And again, he's just the crypto czar. He would not be the determining factor on a tax, but I would imagine his advisorship would be taken into account. Obviously, that's for lawmakers to decide what gets taxed and what doesn't. But it's a very interesting conversation. By the way, sorry if it was loud. I mean, when I put it on, my headphones it was extremely loud. Sorry about that if it was like that on your end. But yeah, I mean, it's a very interesting conversation. Should every crypto transaction be taxed? I mean, it technically already is, but should it be taxed to begin with? That's a conversation that they've been having, and this is a potential catalyst for the price of the cryptocurrencies going much, much higher, right? If they come out and say, and by the way, it's probably not going to happen because otherwise they would have probably tied it in with no tax on tips, no tax on overtime and stuff like that. But there's a potential that they're going to eliminate taxes on transactions of Bitcoin so that you would not get taxed the capital gain. And this would allow transactions to actually be processed. Whether it's going to happen or not, that's a whole different story. I mean, obviously, it would be great if they didn't have tax on these crypto transactions because this would make trading much, much more lucrative and exciting. And I think the prices would kind of go a little bit more crazy. But I do think that there would probably be limits. So they would say like, transaction under $5,000 is not taxed. Or transaction under 10,000 is not taxed, something like that. But anyway, that's kind of what David Sachs stands. I do think that it's admirable that he sold all his crypto and crypto-related holdings. I don't necessarily know that I would do the same thing, but when you're in that, I mean, guys, we're talking about $200 million in investments, and they're accounting $85 million is his personally. I mean, that's a lot of money. That's probably, 100% that's more than anybody who's watching this video. Because I would imagine, well, maybe not, maybe 99%. I would imagine there's probably some rich people who watch these videos, but more than likely not, it's not, right? If I had $85 million in investments, I would probably not be making these videos. Maybe I would. I mean, Alex Becker supposedly is in the 9 figures, and he still makes pretty fun videos. Anyway, moving right along, we also have the more anti-crypto, right? So Peter Schiff warns Americans will be harmed most when the Bitcoin bubble pops and says that the U.S. has the biggest crypto lobby. So let's understand what he says, because I have quite the opinion on this. So he says that Americans would bear the brunt of the impact should a Bitcoin bubble burst. He said, if the U.S. government is not going to buy any Bitcoin, then why is anybody else? I never believed that other countries would be dumb enough to buy Bitcoin just because we did it. Well, that is an interesting point. He's saying if the U.S. government is not going to buy any Bitcoin, then why is anybody else? That is an interesting point, guys, because at the end of the day, the U.S. government does buy stocks, right? Whether it's through government-related funds or whether it's through pensions or sovereign wealth funds for states, right? They buy the stock market. And we see a lot of these investment funds now starting to invest in crypto-related products, whether it's the Bitcoin ETFs or MicroStrategies or whatever Coinbases of the world. They're investing. And so it is an interesting thought process of like, well, if the government's not going to buy it, well, the government's not going to buy it because this is not a conversation that like I think Congress is willing to have yet. This is why they did it in executive order form. I think definitely down the road, I think there's going to be more adoption as we go down the road. It just seems like nothing is stopping this kind of crypto evolution or revolution. I think it's more of an evolution. That's why it's going to take a lot more time because people have to change their viewpoints. Lawmakers have to understand that their constituents want this kind of stuff. And so, listen, I don't think that Peter Schiff is a full-on Bitcoin bear. He understands Bitcoin. He definitely understands what's going on here. But he's saying we've got the lion's share of this bubble. So when the Bitcoin and crypto bubble pops, where it does the most harm is in the US. And that's true. I mean, we saw that during the previous bear market with the FTX collapse. I mean, who was most affected by FTX's collapse? And FTX wasn't even a US entity. And FTX supposedly was not going after, US citizens. I guess FTX US was, but that was also a separate entity. And but bottom line is, right, a non-US entity, Binance, sold the FTX token, another non-US entity. That caused FTX to effectively go bankrupt. And then what happened? Everything else collapsed, right? And who were the most affected? It was Americans. I mean, people around the world were affected, obviously. So anyway, moving right along after what Peter Schiff said there, we also are hearing Tim Draper saying that Bitcoin goes to infinity against the dollar and that $250,000 is just the start. And by the way, we do have some more info and news that we're going to be talking about, including Bitfarms and Cardano in just a few minutes. So make sure you guys stick around and don't forget to give the video a free thumbs up. So Tim Draper envisions a future where Bitcoin dominates, fiat crumbles, and people scramble to convert dollars before they become worthless, calling Bitcoin the ultimate global currency. He is obviously a prominent investor. We know that he doubled down on his Bitcoin price prediction, saying $250,000 by the end of this year. He said if there's a run on the dollar and they're running to try and transfer their dollars into Bitcoin, it's going to happen very quickly. He stated, there will be a moment when I can buy my food, my clothing, my shelter, pay my taxes, all in Bitcoin, and I won't have a need for fiat currency. There will be no reason to hold it because Bitcoin appreciates in value over time and fiat depreciates in value over time because by its nature, government produce more. And so there are more dollars out there than there were before. So your dollars that you have are worth less. And that's what inflation is about. So we're going to have a currency that is very stable. And they're talking about Bitcoin. And listen, this is the ultimate, right, thesis on Bitcoin. This is what MicroStrategy is doing. This is how they're playing. They're playing the central bank at their own game effectively, MicroStrategy. And this is what Tim Draper is basically saying is going to happen with Bitcoin, right? Is that the dollar is always going to depreciate. There's no reversing that, right? Even if you look at the Dixie, people will, with Cryptoviser, the Dixie's increasing. So that means the dollar's more powerful. Yeah, but that's the relative strength of the dollar compared to other currencies, right? And that's currently. So the dollar can have 100% strength right now, but that doesn't mean it's the same dollar that it was 20, 30, 40, 50, 60 years ago, right? Big difference. And the inflation is not going to stop. The Federal Reserve tells us this all the time, but people just don't know what it means. The Federal Reserve says our target rate is 2%. We haven't been at 2% in years, guys. But even 2% is inflation. 2% is inflation. They're just taking 2% from you every single year. And what do most people at work, they get maybe a 2 or 3% raise. I used to get 3% raises, right? And when you're in an hourly position, right? Let's say you're making $20 an hour. Okay, let's just do the math on this. $20 an hour plus 3%, okay? That's 60 cents. 60 cents. So if you do 60 cents times 2,080 hours, that's 40 hours a week, 52 weeks of the year, you're getting an extra $1,248. But then you get taxed on that, right? So you're actually only getting maybe about $800, maybe $900. So inflation is going up by at least 3%. But you're getting less than that after taxes. So you just will continue to be behind forever. And so this is the key opinion of what Bitcoin is about. And I agree with it. I think over the long term, Bitcoin will continue to appreciate. Forget the short-term movements in the price. And okay, so we talked about Trump. Now, you guys know I'm a big Bitfarms advocate. I think Bitfarms is one of the most undervalued stocks in the stock market by far, by far. I mean, we're literally at about $1 when I'm recording this video for the stock, which is about $500 million market cap, and they have almost 20 exahashes per second. But anyway, the CEO, Ben, was on Yahoo Finance. He was on Bloomberg the other day. And so I told you guys, if I find the videos, I'm going to post them and we'll talk about them. So let's listen to what Ben says. Again, the CEO of Bitfarms, BitF, the stock. Let's listen to what he says. And sorry if this is loud again.
The areas where we've been investing over the last 4 or 5 years is on the hard energy infrastructure that used to power American manufacturing. And when American manufacturing was outsourced abroad, all the infrastructure was still in place and nobody really wanted it. So it provided cheap access to energy. Now, as the pendulum is swinging back towards a focus on America and onshoring, these assets that we've accumulated, are what's in high demand. And so we have what everyone wants right now. We've got a lot of megawatts. We've got them in short order. The area
And that's one of the things that we've been kind of talking about with the transition from these Bitcoin mining companies just mining Bitcoin to also looking at high power compute and AI. And for high power compute, AI, and Bitcoin mining, you need energy. And so these companies are well, like all the Bitcoin mining companies for the most part, are well positioned to take on AI, high power compute, because they already have access and a lot of times infrastructure kind of agreements with the electricity companies. And so they can power up very, very rapidly. Where companies who want to start, Amazon or Google, they may not have that access to those kind of facilities and that kind of energy. And so this is going to, in my view, really drive the price of these Bitcoin mining stocks higher in the medium and longer term. But again, this is just my opinion. Do your own research. And this brings us to Cardano. Now, you guys have seen the title of this is like Cardano complexity increases. Coinbase Institutional just posted this on X. They said, "We're excited to announce that Coinbase Derivatives has filed with the CFTC to self-certify natural gas futures and Cardano ADA futures, expanding our offerings in both energy and crypto derivative markets. We anticipate to go live at the end of March. Stay tuned for more details and availability." Now, obviously, the Cardano ecosystem we're getting futures. Coinbase is listing Cardano futures, but I caution, because we've been talking about price manipulation in these markets, specifically with the Bitcoin and Ethereum ETFs, where we theorized that if MicroStrategy or any other large purchaser is buying massive quantities of Bitcoin, we can see that the ETF issuers are selling massive quantity of Bitcoin. Same thing with Ethereum. When the Ethereum hack occurred, we saw liquidations of the exact amount of the hack. And then we saw outflows from the Ethereum ETFs in the $3 billion range. So we kind of know that this is already going on. And then Bitcoin specifically, when MicroStrategy was buying, the Bitcoin ETF issuers were selling almost, if not more. And this is how the price was able to maintain. This is where the liquidity was being maintained from. And as I've explained on this channel, the more Wall Street gets involved in these markets, the more Wall Street controls the market, right? The suits control the market, not retail anymore. A lot of the YouTubers and KOLs, as they call them on, social media have been saying, "Oh, retail hasn't arrived. Retail hasn't arrived." I'm like, what are you talking about? Retail is already here, right? Granted, maybe we don't have, Joe Schmo from down the block calling loans to then go buy, Pepe coin or, Peanut the squirrel or any of these other, meme coins that have been out there. But retail is already here. This is the institutional realm now. And once institutions get on board, they control the market. And how do we know this for sure, besides what we were just talking about with the ETFs, where you can see the flows? This all goes back to the last cycle. In the last cycle, FTX was the institutions. FTX was the liquidity. FTX was the loan processor. FTX was borrowing money. FTX was using your money. FTX was the institution. They were acting the same way that the institutions would act in a market situation. And what else did we see? Specifically with Cardano, because a lot of people who own Cardano now were not aware during last cycle, do not watch my videos, or just don't know what the hell's going on. Last cycle, I was a very big Cardano bull. And what didn't make sense to me is that all of these other coins, the FTX token, all the coins that Sam was talking about, Solana, all of these were performing with no product, with no user base, with no community, with no investor base. They were They were just performing so well. And Cardano, on the other hand, was not. And I wondered, like, why is this happening? I had no idea, right? Obviously, Cardano went from 3 cents to $3. So it did 100x. So let's be clear. Cardano's performance in the last cycle was really good. But it seemed like there was suppression. Litecoin, same situation. Litecoin in the last cycle seemed like there was suppression. Internet computer, I thought it was a rug pull in the last cycle, but it was price suppression. And what do these three cryptos have in common with FTX, with the institution from the last cycle? Litecoin, Internet Computer, and Cardano were not listed on FTX, but they were listed on perpetual futures contracts. And perpetual futures contracts are just derivatives of Cardano. They don't touch Cardano, but they can control and manipulate the price of Cardano. Internet Computer, Litecoin, or whatever derivative they are for. And so Internet Computer, if you look at the price action during the last cycle in 2021, it went from like $100 to $800 to $50 within a month. Most of that was manipulation from the likes of FTX on those derivative exchanges. And so when I see futures, perpetual swaps, which Coinbase does have, and now this is the institutional platform, this makes me believe the price is going to have a ceiling. What that ceiling is, I don't know. And this is all, for the most part, all the cryptos that have these derivatives, right? They build more derivatives on top of derivatives on top of derivatives. This is what the stock market does. And so that's why when you're looking at the stock market, if the stock market moves 1% in a day, turn on Bloomberg, CNBC, Fox Business, they're having a meltdown. They're like, oh my God, the market's down 1%. Everything's going to shit, right? And it's like, crypto goes up and down 40, 50, 60% in one day sometimes, right? So they're crying over 1%. But the reason they're crying, because that 1% is a lot. Because the markets can't move the way that crypto currently moves with these massive swings. And when you're talking about hard money or larger type investments like self-sovereign wealth funds, retirement funds, and all of this, they have to invest in like kind of safe and secure investments that go up over time but don't have massive volatility. Because imagine you have a pension fund, and the pension fund has 50% swings in their overall portfolio monthly. That's not sustainable, and it's not safe for the people who are looking to have pension benefits, right? And so to institutionalize these coins, they have to create these derivatives. But when they create the derivatives, in my view, in my analysis, that means less volatility. And less volatility means more controlled price. And, what does that mean? I don't know. Does that mean more controlled price to the upside, to the downside, or just sideways? Could be either, right? It depends who is in those markets and how much money are in those markets. This is the question. Why not just hold Cardano and you want to hold the futures contract? Why? You can ask the question in the stock market. Nobody knows the answer. They say, oh, it's because it's derivative. It's this and that. It's like, yeah, but why not just hold the actual coin or the actual stock instead of holding the derivative? Because the derivative effectively is worthless. It's just a paper contract. But the actual underlying asset is the underlying asset. This goes back to hard money. Like, what is hard money? Anyway, so the point of this conversation about the complexity to Cardano increases is because, remember, this cycle is different. And this is not just in Cardano, right? There's a lot of people who watch my channel who are 100% in Cardano. At this point, probably less people than in previous last year or the year before, right? But I would say like there's still a lot of Cardano holders. And all I would say is like these large 100x gains that we have seen previously, I don't think we're gonna see it anymore. Just like Bitcoin, I don't think we're gonna see a 100x move in one cycle. I don't think that we're gonna see it. Ethereum, a 100x move would bring us a $200,000. Like, do you really see that happening? It's not going to happen. I think we'll start to see maybe 3, 4, 5, maybe 10x, right? But again, over time, that volatility is going to decrease. And part of the decreasing is building all these derivatives and derivatives and derivatives on top of the underlying asset. And it really should be the underlying asset controls where the derivatives go. But for some reason, the markets decided that the derivative decides where the market goes. That's why everyone looks at the futures contracts. Futures contracts let you know where the market is going in the future today, which is an interesting concept. Why somebody would invest in that instead of just invest in the underlying asset when you see the futures kind of moving. But anyway, you guys kind of get the point. And this brings us to what else Coinbase Institutional is kind of telling us. Here's 5 things that the Coinbase institution is watching. Now, we're not going to go through all 5, but I thought that this one, stablecoins record $30 trillion in volume, cementing their role as crypto's killer app. Now, I don't know that you would consider stablecoins like the main use case for crypto, but okay, Coinbase. Anyway, you can see here, huge increase. And a lot of this, I think, also has to do with the fact that I think that if Trump didn't win, we would not see an increase in all these in all of this. A lot of this is, people realizing, okay, we're going digital. We're getting into the digital economy now. We're going to start moving over, right? All the agencies, the Treasury, pro-crypto now. SEC, pro-crypto now. CFTC, I feel like they were always pro-crypto, but even more pro-crypto now. Presidency, pro-crypto. And so everything is going pro-crypto. What do you think that's going to do? Like, how do you think that that's going to translate in the overall economy? There's going to be more usage. There's going to be, and the key though, is stable coins provide the liquidity. I've been saying this for years. Cardano still has no stable coins, period. People are going to say, but Cryptoviser has this and that. No, it does not have Tether and it does not have USDC. XRP doesn't have any stable coins. Now, they are going to have their own stable coin coming shortly, but are people going to use it? Is it going to be highly integrated, right? You have to think, the banks, Coinbase, all the exchanges can just add the support very rapidly. But these banks, they want to streamline everything. In my view, there is going to be competition. We have Tether, USDC. By the way, Tether's Paulo Adorno, I think he's like their CEO or some executive. He came to the US the first time just recently, and he spoke at the Commerce Secretary company, Cantor Fitzgerald, at their conference. That's Howard Lutnick's company, and Howard Lutnick is also pro-Bitcoin. And so that's a huge move. And that tells me we're probably going to see maybe Tether get regulated in the US. So it would be Tether, USDC, and potentially Ripple's stablecoin. But remember, it's Ripple's stablecoin. It's not XRP's stablecoin. Big difference. Big difference. And Ripple, I would imagine, is at some point going to IPO. Personally, I would buy in the IPO versus buying the coin, XRP, because Ripple is still selling their coins, by the way. But anyway, it all comes back to stablecoins. No stablecoins, no liquidity, no usage, no future. That adds a layer of complexity. BNY Mellon, the oldest U.S. bank, is expanding services for Circle, allowing select clients to send and receive funds for USDC transactions, boosting stablecoin adoption in traditional finance. Like I just said. This kind of stuff should become very, very clear, especially if you're watching these videos on a regular basis and kind of following what's happening in the financial world. Like all of this should be like, oh yeah, yep, kind of confirms our thesis. New entrants have fundamentally diversified overall Bitcoin ownership, right? I don't know what that even means, but I thought it was an interesting fact. Anyway, I hope you guys enjoyed today's video and the conversations. Let me know what you guys think down below. Don't forget to give this video a free thumbs up. Is Bitcoin going to infinity? I think eventually. Will we be around for that? Maybe, maybe not. But as always, invest responsibly, do your own research, and as always, crypto on.